So in Chapter 1, we're going to see what managerial accounting is all about. In managerial accounting, we're going to use the financial information, right? Back in financial accounting, we learned how the financial information is put together. And we're going to use that financial information and we're going to develop reports that can be used for managers to make decisions about how to run the company. And so we're going to start off learning about how we accumulate costs, right? That's going to be important for decision making, for determining how to price the product, for instance. We're also looking at different decisions that we need to make and look at how we go about choosing among different courses of action that the company can take. So let's think about managerial accounting. What type of cost information do our sales professionals need, right? They need to know how much the product costs in order to determine what they can sell it to customers for. How about project managers? What information do they need, right? They need to see the budgets to make sure that they are staying within the budget, right? They got to make sure that they can control costs and adhere to the budget. What about an entrepreneur? A lot of my students are getting their degrees because they want to open their own business, right? So we need to understand about costing principles. We also need to understand about budgeting if we want to be an entrepreneur. And so the textbook kind of lays it out that managers have 3 primary responsibilities. And what we're going to be doing at this course is looking at how to develop information that will guide them in these 3 primary responsibilities. So a manager's primary responsibilities are planning, directing, and controlling. If we think about the planning aspect of a manager, right? Some of my students work as managers currently, but even if you don't work as a manager, you have a manager and you kind of know what your manager needs to do. Well, manager needs to set goals and figure out how they're going to meet their goals. So some examples of planning could be creating budgets. That's probably the most obvious example. We won't do that until after the second exam, but we will look into how budgets are prepared. One thing, maybe we need to decide how to open up a new store. That might be something a manager needs to do. Another thing they need to look at is if they're looking at ways to reduce costs, we look at reducing store hours. Directing. So this is probably the bulk of what you think about when you think of a manager. A manager has to oversee the day-to-day operations. So examples of the directing function when they determine staffing, right? They have to set the schedule, who's going to work when. Deciding which supplier we're going to go with. Okay, setting the sales price. And then controlling. This we will look at after we do budgets, then we'll look at controlling. Controlling is seeing how we did. So we make our plan, we execute our plan, but then at the end we need to see how we stack up against what we planned. And that will help us make future decisions and make future plans. So examples of controlling, probably the clearest example would be at the end of the period, we compare our actual results to the budget, and then we investigate why were we different. And so we actually will spend a couple chapters looking into that, looking into the reasons for the variances. Maybe there was some inefficiencies that we need to correct. Maybe there was some things that happened that were just kind of one-offs, won't happen again. Or maybe there were things that we didn't factor into the budget that we need to take into account in our budgeting process. And so we know about financial accounting. Let's look at how financial accounting is different than managerial accounting. So financial accounting is the branch of accounting concerned with preparing the financial statements. So that's what we worked on in financial accounting, kind of getting to our goal was the financial statements and really being able to interpret those financial statements. In managerial accounting, we're going to be preparing reports not for investors and creditors. These are going to be for our internal stakeholders. So this will be for our managers mostly, so that they can make decisions for the business. Financial accounting is for, they have to be prepared at year end. Okay. Managerial accounting statements are not a legal requirement. This is just done to help managers get the information they need to make decisions. So we prepare it whenever it needs to happen. Okay, so there are some managerial reports that could be run daily, weekly, or we could have a special project coming up and we gather information. Financial accounting is we're reporting on the past. It's data, historical data. You'll see a lot of what we're doing here is we are doing projections. We're forecasting future sales, future costs, right? Especially when we're doing our budgeting, right? So here we've already kind of said this, that financial accounting is prepared for external users, creditors, and investors, and managerial accounting is for internal decision makers, management. Financial accounting, we have to follow GAAP or IFRS. There's no standard setters for managerial accounting. And so that's one of the cool things I think about managerial accounting. It's really logical. And there's different ways you can structure your reports, right? In GAAP, it's very rule bound. There is a correct way of doing it. Managerial is more problem solving. So I actually think managerial accounting is kind of fun. I hope you do too. Statements have to be audited. We don't need an audit because we're not showing it to anyone outside the company. Financial accounting, less detailed, right? We did do things in a lot of detail in financial accounting, but if you think about our financial analysis project, when we looked at the financial statements in the annual report, Form 10K, for the companies that we were analyzing, we could see these companies, they were so big that they rounded to millions of dollars. They even just left off the millions because they were that big. But their financial statements didn't have that many lines, right? A lot of things were grouped together. It's less detailed. Managerial accounting is going to be very detailed because we want to have all the information we need for our decision making. We want to see everything. We don't want to assume things. So financial accounting, the focus is on being reliable and objective because we know investors and creditors are, using this information to decide whether or not to give the company money. And not that managerial accounting doesn't need to be reliable, but it needs to be relevant. That's going to be more so the focus, right? We want to have the information that matters to the decision that's at hand. Financial accounting reports about the company as a whole. So we're looking at the whole company. Managerial accounting, we're probably not looking at the whole company. We're looking at a portion of the company, a segment of the company. So we could be looking at a product line. We could be looking at a division. We could be looking at a region. We're looking at the part of the company that's going to be affected by the decision. Okay. And so these are the main differences between financial accounting and managerial accounting. And this is going to make sense, you'll see, as we go through and start applying what managerial accounting is. So the primary focus of managerial accounting, okay, which one of these choices would that be? And that would be providing relevant financial information to plan for the future. All right, so let's take a look at how managerial accounting fits into the organization. Okay, so we've got our board of directors that's elected by the stockholders. They hire the CEO, okay, and then the CEO will hire the COO and the CFO. So the chief operating officer, right, oversees the operations. There will be various vice presidents reporting to the COO about the operations. The CFO handles the financial side, right? The treasurer is going to report to the CFO. The treasurer is in charge of the cash management for the company. The controller is in charge of the financial reporting, right? They go and they compile and they put together the financial statements, right? Internal audit, we think of it as part of this function, but they're actually overseeing, and they're going to be doing the audit procedures for the financial information. They report to the audit committee, right? And so we learned about that with Sarbanes-Oxley back in financial accounting. The audit committee is kind of independent, and they look into any, they hire the auditors for sure, but then they're a step that can look into any improprieties. And so it used to be management accountants were part of that financial branch and reported directly to the controller. But things have developed where now management accountants are going to be working on cross-functional teams throughout the organization. So when we have a project coming up, a cross-functional team will pull individuals from various parts of the company. So you'll have R&D, design, production, marketing, distribution, customer service, and the management accountant will be part of that team, will be compiling information so that they can be part of the decision and talk about how it will impact the financial statements of the company. And so let's kind of take a look at how all of these roles fit into the company. So raising capital and investing funds are the direct responsibilities of the treasurer. Financial accounting, managerial accounting, and tax reporting are the direct responsibilities of the controller. The internal audit function reports to the CFO or the CEO and the audit committee. The CEO is hired by the board of directors. The company's operations are the direct responsibility of the COO. Management accountants often work with cross-functional teams. The CFO and COO report to the CEO, and the audit committee is the subcommittee of the board of directors. So let's wrap up by reviewing some of the differences between financial accounting and managerial accounting. So which one of these must follow generally accepted accounting principles or the International Financial Reporting Standards? That would be financial accounting. Which one is largely based on forecasting future sales and cash flows, calculating costs, and preparing budgets? That would be managerial accounting. Which one is concerned with collecting data of historical nature? Which one reports on the past? That's financial accounting. Which one does not require independent examination? It doesn't require an audit. Managerial accounting. Which one is primarily prepared for external users, such as creditors and stockholders, so they can make sound financial or investment decisions? That's what financial accounting does. Which one has reports that are very detailed and provide a wealth of information? That's managerial accounting. Which one reports about segments of the business, such as a product or a region? That's managerial accounting. Which one emphasizes that data is relevant? The emphasis in managerial accounting is relevance to the decision. Which one emphasizes that data is reliable and objective? That's financial accounting, because that's important to investors and creditors. So that just kind of gives us an overview of the differences. Next, we're going to look at how managerial accounting is changing, how the roles are changing because of new things in the business environment.